Hello everyone, George Dos Santos here with the look of the market for the week ending Friday, April 17th, 2020. Before we go further, as usual, let's bring up the disclaimer. Um, Simply advises you not to take this to be individual professional investment advice. Since I'm not a professional investment advisor, I'm doing this for my own purposes. It is a video, anyone can look at it, interpret it in any way that they see fit. Um, so I hope everyone is well and you're avoiding this awful virus that's going around. Um, so let's begin then by taking a look at some charts. So let's begin as we usually do with looking at the weekly chart of the S&P 500. And we start with the moving averages. So here's your 4 exponential moving average. In this case of course, a 4-week exponential moving average. It's below the 9 exponential moving average still, and the 9 is below the 30 weighted moving average. So insofar as moving averages are concerned, we're beginning to look as though we're turning the corner here to indicate an uptrend with the moving averages. We have other indications of an uptrend, and that would be, for example, the parabolic is now below these last 2 bars, last 2 weeks. So that's indicating that we have switched from this downtrend to an uptrend now, according to parabolic. Notice that we are just sitting above the 50% retracement level, Fibonacci retracement level, and we are closing between the 50% and the 618 golden rule, as it's called, retracement level. Now, if we look at some of the other indicators, like MACD histogram, you can see that the histogram has been trending up. It's been shortening up here for the last 2 weeks at least. So that's an indication that we are looking better here in terms of the strength of the market. And if you read any of Alex Elder's books, you know that one of the best times to be buying the market or the stock or whatever it is when MACD histogram is trending up from below the 0 line. And we have that here. We're still with the weekly chart. We'll look at the daily in a minute. You can notice that one of my favorite indicators, Williams percent R, crossed above the magenta line, that minus 50 line. So that is giving us some reason to be a little more optimistic about the uptrend occurring here. And on the sum of the rate of change indicator, we don't yet have a cross over the 4% line, but on the daily chart we do. This is what that circle indicates. Stochastic is trending up a bit. So we turn to a daily chart of the S&P 500. On the daily chart, you can see that the 4 EMA crossed for the first time since the market fell, for the first time back here, which was what, March 26th. Then it wobbled a bit here and it crossed again definitively, and it's remained that way. The alligator's mouth is still open. 4 above 9, 9 above 30. Now, the other thing to notice here is that parabolic, since it's switched to indicating that the trend is switched to an uptrend, it remained below the most recent bars. So every bar here, it hasn't turned around again. It hasn't gone above the bars. So that's a good indication on the daily chart. What else do we find? We saw this on the weekly chart, but we're now sitting between the 50% retracement level and the 618 retracement level. So that's what we see here. Now on the MACD histogram, you can see the histogram is still above the 0 line. It seems to be trending down a little, but that's nothing significant at this time. And you can notice here how the Williams percent R crossed over here and has remained above the magenta line or minus 50% line. And also the sum of the rate of change indicator is now indicating bullishness. Stochastic is an oscillator, and you can see it remains overbought. But with oscillators, as I mentioned before, when you have an uptrend, the oscillator can remain overbought for a while. One thing that I wanted to mention here is this: always looking ahead. What do we expect? What sort of roadblocks might there be in the future? Well, remember Larry Williams did two videos. In the first one, he said he showed on his charts that he was predicting that the market would rally from about the middle of March, first week in March, all the way to the end of March, and then it would begin to come down around the first part of April, and it would make a low in June, June 1st. Well, then he put out another video saying that if we cross above the 50% retracement line and we stay there for for a couple of bars, at least is my interpretation, then we are likely to continue to go higher. So I see a little bit of a conflict here between what he said in one video and what he said in another. So we'll see which interpretation is correct. But let's just follow what we see and trade what we see. We see an uptrend on the weekly chart and an uptrend on the daily chart. So personally, I bought a few more stocks and sold some covered calls on what I owned. And we'll talk about that later when we look at the individual stocks. But the market's looking bullish here still. So now we turn to stockcharts.com and look at some of those charts that we usually examine. And the first one here is Apple. I don't own Apple at this time. I did write it up nicely and sold it and have looked at it come all the way down here. Anyway, Apple seems to be topping out here. And I noticed either Goldman Sachs or somebody else downgraded it. So keep an eye on Apple. I'm not sure it's going to continue to rise like that right now anyway. Here's a chart of the new high, new low index, and you can see that since we made this spike down, as Alex calls it, we're still up here in terms of the new high and new lows, the difference between highs and lows, okay? So we're still doing very well at that. And on this chart, it shows us the percentage of stocks that are above the 200-day moving average of the S&P 100 that are still above that average. You can see how it's been still trending up. So that's positive, that's bullish. And here's that seasonal chart on the SPX, the S&P, from Best Choice. It's a seasonal chart. What you see here is that we tend to trend up from March into April, and it seems that we tend to flatten out here between May and July, and then we get an uptrend again in July. And that trend it works 100% of the time. From June 27 to July 23rd, you get 15 times, 15 years, we've had an uptrend. We've had a gain. Look at the percentages here. So that's something to keep in mind. So now we'll turn to Shaken Analytics software and take a look at some individual stocks and even some ETFs as we go along. If you're interested in the SPDR ETFs, you can see how they're rated here. From the healthcare SPDR, XLV, is very bullish. These are neutral, but you can see the top performing ones at this time would be healthcare, materials. This would be the communications services, financials. You can see that they're all doing quite well at the top. This would be the staples, consumer staples. But what you notice too is that many of them are overbought. So don't be surprised to see a bit of a pullback because we want to buy here and we're over here. We're overbought instead of being oversold. This is where we want to buy here at the oversold regions, Anyway, let's look at another list. Now, what I've noticed in looking at a lot of these charts, and I've gone through probably hundreds of them today, is that many of these stocks that we would typically consider owning are overbought, and like Microsoft and many of the other ones, Adobe and so on. So what I did was I went through to many of these lists to see what stocks are oversold, and look pretty decent with other indications as well. So here we have a list. I won't go through all of them, but you could take a look. I'll highlight a few that I think I would consider buying. I don't know this company, Howmai Corporation or Himai Corporation, electronic equipment, but it was oversold and ticking up, and that's where you would want to buy a stock. Intel, some of these stocks are not quite oversold, but I thought they look interesting anyway. So Intel looks as though it's interesting here. The bonds, TLT, was oversold and now it's ticking up. So that TLT might be a stock to own here, an ETF to own. Here is YY. I don't know this company, Joy Interactive Media, but it's oversold and ticking up, and this is where you would want to buy. This company I'm not familiar with, Assembly Bio. It's a biotech. It's ticking up, not quite oversold, but it's ticking up again, and relative strength has a breakout on it. So it looks interesting. I'll see how many I could do. This is what? Aztec Industries. It's machinery, but you can see it's oversold, and you might want to put it on your watch list. Sienna has strong ratings on many of these things. It's now oversold, so it's one of those that I would consider taking a closer look at. And here's another one, Fortinet. You can see that most of these are bullish or neutral. It's not quite oversold, but it's ticking up from the neutral region, and all the other indicators look good. It's bullish, and you have money flow strong, and you have the relative strength strong. So that's something I noticed. I might take a look at that one. This is an ETF, so iShares of healthcare. PBH, that is a pharmaceutical company. You can see it's becoming oversold, and it's rated bullish, and money flow is pretty good. I'm not familiar with this one. It's a healthcare equipment company, but it's oversold, and it's where you would want to take a good look and maybe buy, because you have money flow is positive, not by much, but you have this personality change, as Shakin calls it, from negative relative strength to positive relative strength. So this is something to keep in mind. I have quite a few of them here. CMI, that's becoming oversold, but you can keep an eye on it. GE, interestingly enough, was up 9% on Friday. Too bearish here, though. The relative strength is so negative that I would, it would be a big leap to say GE. Micron is becoming oversold, and it's not too bad in terms of its money flow, and it's still positive in terms of relative strength. XLK is that technology ETF, and it is overbought. It is overbought, so you might want to wait till it pulls back. But boy, that's recovered nicely, as we know, with the rest of the market. Now, some of these I own, like Citrix. I own some Citrix. It became somewhat oversold, but it's really in neutral territory here. But I like these indications here. You see, it's neutral, but the relative strength is strong. Money flow is good. I own that one. DocuSign I still own. I sold some calls on it. And you can see the relative strength and money flow pretty good. A few more. I just bought Ring. Ring was oversold, and you see it's ticking up. And I like the other indications here. We don't have much time left, but you could take a look at some of these other ones that I've just brought up here. So I hope that everything goes well this week for you, and we'll do this again, God willing, next weekend.